day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, and we are now on the 8th of April, 2019, just after 4:05 p.m. Central Daylight Time. You're looking at the settlement, a very mixed day in the market, but I will tell you what today was about. Lack of real trading volume, lack of volatility. I'm tired from it. You know, when you don't get enough action, it wears you down. Metals were up a bit today as the dollar took a hit, and we're looking at most of the currencies up against the dollar. Does it really mean a lot? Probably not until we get into Wednesday's real CPI numbers, and then we get to see the Fed minutes as to what they're thinking. Energy prices much stronger today as the conflict right outside of Tripoli, now Libya, is escalating, and it appears that there's another civil war breaking out with control of the country up for grabs again. So far, the oil has not been impacted, but there's the what ifs. We know that OPEC is talking. They don't want to do anything until May or June anyways to have a meeting. So you're dealing with the supply questions. In the grain markets, a little bit of a down day, but not much there. So when we take a look at the weekly area chart of closes, we continue with this rally that's going on. It's stalled. You were up 2 points for the week so far, but it is only Monday. When we see how the market's been reacting here on the daily chart, it keeps climbing that wall of worry. It does have the pattern of higher lows, higher highs, which remains into the bull camp. The market is well over the 18-day average of closes. So this isn't the real, well, while it could be support, to get to that number, you'd have to break through this 2871 level, which would put a short-term top action in place even if you fell back to that support level. In terms of the Bollinger Bands, you can see where the resistance is. Each day you keep pushing out on that number, ever so small an amount. If we come back to the other day, this was Friday's action, up 13 points, up 3 points the day before, up 12, and then down 3.5. So you're adding, don't get me wrong. It's a grudging add, and there's nothing wrong with that. That's still a sign of strength. And here's the real sign to me. As long as you keep these numbers now over the 80 level, you're embedded. And it means to me that on pullbacks, the market is likely to see good buying support, and until the red line closes under 80, even if you were to take out 2871, I think the pros would be willing buyers looking to pop out on those rallies towards that Bollinger Band if they could drive it there. In the NASDAQ, my eye goes here, and I see that both numbers over 80 today, both over 80 on Friday, and both over 80 on Thursday. So here too I have the embedded reading. Same thinking goes hand in hand with that. The Dow got the embedded reading today. So until the red line closes under 80, I expect to see that support. We know the Dow has been weighed down by Boeing. That's been the biggest issue this market's had going for it, and it continues to weigh on that market. In the Russell, we got up, and you know, last week we had finished up on Friday with the weekly updates. Here's Thursday's action. If you continue into Friday, I'd be looking for the 200-day average and the 18, the numbers between 1584.70, let's call it 5, and 1585 or 1586, right in that neighborhood, to be the resistance. You made your run up on Friday to 1588.20. You got a little bit over that today by 1 tick, but that's your resistance point. You're not embedded here. So the Dow and the Russell had been the weakest. The strength has been in the NASDAQ and the S&P. The VIX is pretty much caught at the 18-day average of closes, but still in a downtrend with lower highs, lower lows at work. To negate the downtrend, you'd have to take out 1403 if the market were to drop. The potential for the lower Bollinger Band is there, but the market's having trouble. The lower that band goes, the harder it is to get to it because you keep getting to these lower numbers where you don't get a lot of traction on the downside. In the T-bond market, the battleground's the 18-day average of closes. And as you can see, you finished today at 1420 underneath that number. This isn't as clean a chart as you've got in the 10-year notes, which has had a pattern of lower highs, lower lows, closing under the 18-day average and momentum pointing down. So this is the more bearish of the two. In terms of TLT, the settlement today at 123.59 is under the 18-day average. You've got lower highs, lower lows. The bias down since you settled under that. Momentum down. Support way down here if the market can build any momentum to the 120.29 to 26 level. Doesn't have to go there, but it's a support zone. The dollar index has got an embedded reading which is bullish. It's got lower highs, lower lows, which is bearish. That part's difficult. Then you've got bias up because you're over the 18-day average. As I look at charts, I let the slow stochastic take the rule of the day, and under that reading, this market remains bullish unless the red line closes back under 80, and it's a flip-flop in the euro. If you lose the embedded reading, which closed at 1888 today, both numbers here under the 20, as long as it stays that way, the odds favor, if there are surprises, they should be to the downside. Lose the embedded reading, and then the 18-day average comes back into play. In the British pound, we have more of the drama going on. As I understand it, Miss May is headed tomorrow to go both to Berlin and to Paris to meet with the heads of the country, and then on Wednesday with some type of plea for a Brexit deal that gives them an extension until June 30th. How she gets away with that without having the EU elections that are required is anybody's guess, but so far there's no deal on the table. Very difficult. Higher high, lower low. A lot of traders probably just staying away from that currency. Then we get to the yen, which is still oversold in a downtrend. The question is, can it make it to the lower band, or is it exhausted this leg a little bit right now? In Bitcoin, the market is, if you will, fighting its battle at the upper Bollinger Band. As much as people may not like Bitcoin for a number of reasons, you can't argue that the market's made a basing formation, has broken out of it. Since December, it's gone up in value about 80% of its value, so it's had a heck of a run. It does not have a lot of open interest in it. It has volume that is there during the day, but you'll trade more bonds in minutes than you will for the whole day in the Bitcoin. In the Brent versus WTI crude, it's the spread that just keeps coming in, as the question mark is, of course, what's going on, and the strength is in what? The WTI. As you can see, this market, the Brent, is running the upper Bollinger Band. It was over it today on the close. On Friday, the market settled at 70.34 over it. That was day 2 in a row. Day 3 in a row was let me see, the settlement 69.40, it was not there. You've only had 2 days in a row. You closed under it on this day. So not extreme in any manner. Get to 3 days in a row, you start getting to more of an extreme level. In the WTI, you keep pushing out the top, falling back, but still very bullish action, not backing off at all. Rebob gasoline, you know what the gas pumps are doing. I was driving out to Indiana over the weekend, and I'm watching the prices climb between Illinois and Indiana, both going up. And we had a bounce today in that gas where you lost the embedded reading. Now, unless it's down right away tonight, if that doesn't occur, the odds favor price in the 18-day average making a run at each other towards this 275, 276 zone, because you've lost the momentum. Put the momentum back down, you might be headed back to these lows. It's going to be an important day in that tomorrow. I recorded a special report on the Dow Jones and where the market's just getting into this embedded reading, what it might mean, along with where the seasonals are at this time of the year. Both the Dow and the NASDAQ are often markets that get what we call strong seasonals to the upside. Now understand something about seasonals. Seasonals are based on something that happened in the past, but it is no guarantee that the same thing is going to happen in the future. If it were the guarantee, we'd all be selling our homes and everything we'd have, and you'd place the bet on it. Definitely don't do that, okay? The idea is that they work more times than not. It's a tool, and when they stop working, they stop working. There's always a reason why, and people make it up. But in any case, if you go to our website at www.iraepstein.com, under research, you're going to see Ira's Dow Jones report. Click on it, enjoy it, and I'll talk to you tomorrow.